Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And as we teased at the end of video one, we're going to talk about how to repair a failed trade. Dan, you got a failed trade, man? What the hell? What's going on?
I do.
So what is a failed trade first, and then we'll talk about how to repair it.
Well, it's you're expecting a stock to go up and it goes down instead.
So zig versus zag.
Yeah, exactly.
Okay. All right.
And I had one that I was watching. I'll show you actually I'll show the chart. I didn't bring the chart up, but I can bring it up.
Okay.
But at any rate, it's one that I've been watching because they consistently beat their earnings every quarter.
Yep.
And their PE is really low. It's in the chip sector though. So when Micron announced their earnings and all the chips fell, including this one.
Yeah, I think I know.
But it was getting down to a point where it looked really attractive, and fortunately, it looks even more attractive.
It looks even better now. All right. So this is AYOS, if I'm guessing.
AOSL.
Oh, AOSL. Sorry.
Yeah.
That was the company, just wrong acronym. Okay.
Yeah. It's Alpha Omega
Okay.
Systems or something.
All right. So you like this company, you put a bet on, meaning you thought it would go up. It didn't go up. It went down because of Micron. That's kind of where we are, repairing a failed trade.
Right. Yeah.
So this is a trade. I want to be very clear, right? I'm an investor. I invest for a long term. This is a trade, not an investment. Is that?
Well, it could be. It actually, this strategy could actually work for either.
But what you said? It's a failed
trade. Trade for me. It's a trade for me.
Okay. I just want to be clear.
But it's kind of a good news, bad news thing. Now that I'm trying to repair this trade,
okay,
this could take a couple of months to do.
Okay.
To get it back to even.
Okay.
But during those couple of months, the market might just start taking off.
Well, it could also go the other way.
or it could go the other way. Right.
Okay. All right. Repairing a failed trade. I like it. So I got all kinds of questions, but I'll let you set it up first.
Okay. Let me share. I'm going to show my newsletter here first.
Please.
And by the way, I just came back from Cabo and I'm still kind of spaced out today.
So, yeah, haven't get a full night's sleep yet. Sleeping on an airplane is no fun.
Right.
Yeah.
Yeah. Got to bed at like 2 a.m. last night.
Yeah.
All right. So the newsletter I put out every week is just the research that I do, and I've shared it with my friends and family, and now with your listeners.
Sure.
There's no charge. If you want it, just send me an email to breakpointtrading@gmail.com. And I'll add you to the list. And if you ever get tired of reading it, just let me know and I'll take you off the list.
There you go.
No big deal.
Okay.
All right. So let's go first. How do I want to do this? Let me bring the chart up first.
Okay.
That. All right, there's what it looks like. You can see last week, this big red candle here.
Mm-hmm. Yep.
So it started going down.
Okay.
I can actually zoom in a little closer. Started going down right here, which is okay. I mean, it didn't go down huge. I bought it at 35.80. Right up in here.
All right.
And now it's at 30.
Okay.
So about $5 roughly.
So a couple quick questions, because you help me with all this all the time. Didn't you have a stop on this, or you did not have a stop?
I did not have a stop on it.
Okay.
In this particular case, but I did do something called a collar.
Oh.
And that's the reason I didn't have a stop.
Okay.
A collar is a way to protect a trade if you go on vacation.
Okay.
And I'm not going to get into that too much. I'm going to talk about one side of that collar, not both sides.
Okay.
But it's essentially buying a put, which is insurance.
Yep.
Right? Because the put goes up if the stock goes down.
Okay.
But it's buying the put without having to put up any money.
Okay.
And the way you do that is you sell a call.
Okay.
Where you make money.
Right.
And you buy the put where you spend money.
Hence the collar.
And they basically balance each other out. So you have a no cost insurance policy
Okay.
against the trade.
All right.
That's basically what I did because I
Okay.
was on vacation.
All right.
All right, but I'm only going to talk about selling the call part of it.
That's fine.
And then I'll talk about why a little bit after that.
Mhm.
All right, so you understand the setup so far?
I do. Yeah. I'm still
Okay.
confused on why you don't have a stop, but that's what we'll talk about. Well, I'll ask all my questions at the end.
Right. Well, you can't have a stop if you're putting on a collar.
Oh, of course. Okay.
It won't.
So-
It won't
so-
allow you. It won't
Got
allow
it.
you to do that.
See, these are things I didn't know. Got it. Okay.
Right. So if I put a stop on it, then it would go down, and I would be out, but I would realize the loss.
Right. I understand.
Whereas putting the insurance policy on it, if it goes down, I make money, or I at least break even or close to
Right.
break even.
Okay.
Or I have an opportunity to repair the trade, bring it back to break even, and maybe better,
Okay.
which is actually what we're going to talk about here.
So repairing a failed trade. Thought it was going up and it went down on you. Got it. All right.
Right.
I will
Okay.
listen.
Now, in order to do this, you have to be able to do options
Okay.
clearly.
Okay.
And knowing that ahead of time, one contract of options equals 100 shares.
Mhm.
So if you're going to do this kind of strategy or want to have the opportunity to do that strategy,
Mhm.
then you have to buy shares in multiples of 100.
Yeah. Round lots. Right.
Right. Round lots, right?
Yep.
100, 200, 500, 1,000.
And let's be
whatever.
very clear before we go into this. I will not be doing options. This is not advice for options. Nobody on my channel should take this as an example. I'm just learning, just like you, from an experienced trader, how he's
Yeah.
going to repair.
That's a good point.
trade.
Yeah, we are not recommending anybody do
No,
this
Don't
trade,
do options. They're too risky, blah, 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 blah.
and we're not recommending anybody buy a OSL
No, not at all.
or any other, trading or investing mechanism,
Nope. I'm just trying to learn.
because we are not financial advisors. We are just doing this for fun,
Yep. You're trying to help me. Got it.
just educational purposes only.
Mhm.
All right, so initial purchase was $35.80.
Okay.
Okay. Current price is $30.12.
Okay.
So that's the close on Friday.
Yep.
So unrealized, in this case, loss
Oh, I got you. Okay.
is 568 or
Mhm.
16%.
Yep.
Unrealized because I haven't sold it.
Right.
Okay. So now I mentioned that I put a collar on it as insurance.
Mhm.
But in this case, a collar is selling a call to make money because you get paid the premium when you sell,
Mhm.
and buying a put for insurance, which goes up if the stock goes down.
Mhm.
But because you paid for the call, they offset each other. And you basically have insurance at no cost.
Okay.
Okay.
Sure.
So that's what I did. But I'm only going to talk about selling the call in this case. So it's a covered call strategy. Covered means I own the stock.
Mhm.
That's what covered means. I own the stock already.
Mhm.
And call means I'm expecting it to go up at some point in the future.
Okay.
All right. But I'm not buying the call, I'm selling the call.
Yep.
And when you sell an option, you are paid premium. It's like you're an insurance company. People are paying you the premium.
Right. Okay.
So
got
I am
you.
getting paid the money to sell the call.
I see. I understand what you're
All right.
doing. Okay. Yep.
So what I did was I sold July 15th calls. So that's 2 weeks out, basically.
Mhm.
I sold the $35 strike price, which is just about where I bought it at.
Yep.
Right.
Yeah.
And because I'm selling that call, I made $1.11.
Right.
Went directly into my account immediately.
Yep.
All right. Times however many shares. 1,000 shares, then it's
Yeah, I got you.
$110. All right. So now my unrealized loss is down to only 13%.
Understood. Yep.
All right. That's over the next 2 weeks.
Yep.
Or another way to look at that is the $1.11 I got paid minus the $35.80 that I bought the stock for.
Yep.
Gives me a new cost basis of $34.69.
Mhm.
All right.
I see that.
So
Yep.
my cost basis goes down every time I do this.
Okay.
So if I continue to do this, let's just assume for a second that it stays at $30,
Mhm.
and I do the same thing next month.
Mhm.
Then this goes down to 33, the next
Right.
month to 32, the next month to 31.
Got it.
And eventually it goes to 30 and I break even
Understood.
if the stock doesn't move at all.
Right.
Okay. Follow me so far?
Of course. Yeah, I get you. Yeah, I
All
understand.
right.
You know.
So there's the new cost basis, 34.69. Now, if the stock is below 35 on July 15th, let's say, for instance, it's at 34
Okay.
in 2 weeks.
Mm-hmm.
My unrealized loss now is only 2%.
Mm-hmm. Yes.
Unrealized.
Correct.
Because remember, my new cost basis is 34.69.
Mm-hmm.
So now my loss is only 69 cents instead of $5.68.
Mm-hmm.
However, because it's below the 35,
Mhm.
my stock does not get called away.
Yeah. Your
I am
option-
selling that call, giving the person that's buying the call the right to take that stock from me
Mhm.
and pay me $35 for it,
Yep. Right,
Right?
but not the obligation. Yep.
not the obligation. I have the obligation to sell it because
Mhm.
I'm selling the call. So
Right.
I do have the obligation. Person
Not the-
buying it has the right, but not the obligation.
Correct.
But I do have the obligation to sell it to them for $35.
Yeah. For example, if it was at 36, they would buy it at
If it
30.
was at 35.01,
Yeah.
I'd sell it to them for 35. But remember, I made $1.11.
Correct. Yep.
So I'm really selling it for 36.11,
Correct.
right?
Mhm.
But let's say it doesn't get above 35. Let's say that over the next 2 weeks, it only gets to 34.
Mhm.
Well, then it expires worthless.
Correct.
And I keep the $1.11
Mhm.
and I keep the stock.
Mm-hmm.
And I could just do it again the next month if I want to.
Understood.
Or I could take my 2% loss instead of my 16% loss
Mm-hmm.
and sell the stock then.
Yes.
Or I could put a stop under it at that point at 33.
Got
A lot of things I could do at that point. But now my percent loss is significantly reduced
Correct.
by repairing the trade like this.
Interesting.
But what if it goes above 35?
Mhm.
If it's above 35, let's say it sells, then I have the obligation to sell those shares at $35.
Mhm.
And remember, my cost basis now is 34.69.
Mhm.
So I've made 1%.
Makes
So I've
sense.
repaired my trade to break even or a little bit, tiny bit of a gain. But I've repaired the trade over the next 2 weeks.
I like it. Okay.
Okay.
Mhm.
Now, if it is at 34, or let's say it's still at 30 or 31 or 28 or whatever,
Mhm.
I can choose to do the same thing again
Yep.
the next month.
Right. August 15th or whatever.
And I
the
could
date.
continue to do this until my cost basis gets down to a point. Let's say I bring my cost basis over the next 2 months down to 32,
Sure.
right? And then the stock is selling at 33.
Mhm.
Then I still have a profit,
Yeah. I see what you're doing.
right?
Yep.
So that's why I say doing this kind of repair, even if the market continues to go down, or let's just say it goes sideways, it doesn't go anywhere.
Mhm.
And the stock doesn't really do much.
Mhm.
It stays around 30 or 32 for the next few months.
Mhm.
And then suddenly in the fall, which I'm expecting the market to start recovering
Mhm.
and start going back up, well, I still own the stock.
Right.
I've now repaired it to break even or maybe a little better.
Yeah.
And now I can ride it back up at a much lower cost basis.
At which time you would put a stop on.
At which time I would put a stop on it because I'm not going to do a collar like I did when I went on vacation.
Understood. I got you. Okay.
Okay.
Very cool.
That makes sense?
Absolutely. Absolutely.
Good. So we'll see. I mean, this is a real trade.
Yep.
So
Yeah,
we
I-
can follow this and you can see me lose all my money. But you know, on that point, by the way, and this goes back to our conversations early on about using the risk calculator.
Yes.
I do not risk any more than 1% or more than 10% of my whole portfolio on one trade.
Yeah.
So even if this went to zero,
No big
I'm
deal.
only going to lose 10% of my whole portfolio.
Yeah. And again, Dan has a playlist. It's just Dan Bird. Go back and watch some of the early videos on the risk calculator. Again, I am not trading. I'm an investor. I've moved money over so I can buy stocks to keep. I use the risk calculator. If I'm going to do it, I'm waiting to get in. I do not do trades, do not do options, don't recommend them, but it's always fun to learn and see what the experienced folks do. So Dan, I appreciate you. Thank you very much.
Let me show you the newsletter again
Please.
before we go.
Absolutely.
If anybody's interested, there it is. I
Yeah,
just
if
sent
you're
it out.
listening on the podcast, it's breakpointtrading@gmail.com. It comes out weekly. If you don't like it anymore, just say get out. It's free. It's a lot of fun, and there's always cartoons that make you laugh. That's what.
And I'll send if anybody wants to join the list, I will send you this past week's newsletter.
Awesome.
Just to get you caught up. So
well, I look forward to reading it because I just got it this morning. I look forward to reading it later this afternoon. Dan, thank you very much.
you bet. Happy 4th of July.
Happy 4th of July. Thanks, bud.